Hey, welcome to Closing Beat, everybody. Happy Tuesday to you. It's Tuesday because the market was closed yesterday for the inauguration of Martin Luther King Jr. Day. We are financial advisors here at Jazz Wealth. We are the best financial advisors east of the Gulf of America. That's official, too, by the way. We are the best. Hope you'll check us out at jazzwealth.com. And, of course, we'll be happy to talk with you or point you in the right direction there. We're going to do this in a few different ways here today. We're going to go top-down analysis, stocks in the news. We're going to do a investor spotlight, something interesting you might not have thought of, a strategy for picking some stocks. We'll talk about Trader Time, some of the trades we did in the office here today, and then something called You Learned It Here First, something you probably did not know, and I'm going to bet you didn't. So let's dive into it here. So here's the S&P. So we talked about this downtrend here, looking to break out on Friday, even though I'm using the futures market. Not that exciting. Yeah, technically we broke out, but I put in our Notes from Jazz email this weekend. The bulls aren't 100% convinced. You get Trump into the office signing all the executive orders and doing all that kind of stuff there. And you have a recipe for about a 1% gain in the market. The Dow with the big numbers up over 500 points. And, we had 40 new highs today. Right, so obviously the market's not at new highs, but we had 40 new highs. Now, a lot of those are going to be financials, a lot of them. Goldman Sachs, right? So that's what I mean by that. You got a new high in Goldman Sachs. You got Citigroup, American Express. These are stocks that are getting, not all of them, but they're getting extended in the super short term here. So careful if it's something you are, like JP Morgan, it's something you own. Is that the best time to add more shares? Like you want to pay top dollar and also extend it in the short term? Yeah, you got Wells Fargo, Visa. I just keep going on. Discover, all of those hitting new 52-week highs today, and that's obviously helpful for the S&P because we have broad participation. It's not just Netflix, which, after hours, we'll cover it here in a second, but yeah, after hours is Netflix, but that would be more the NASDAQ. So the NASDAQ finishing up the day nicely, but with Netflix's earnings after hours, that's going to be more interesting tomorrow. You got the Dow. Talking about this one, it pulled back the most out of all of them. It's not really the easiest thing to play, but a gain today of over 1.25%. And then, of course, the other 1% gainer is the Russell 2000, your small cap stocks there. If you look around the market now before we start diving into it, where'd it go? Oh, there it is. Crude oil finally pulling back. Beautiful. In our office trades, we pretty much have a whole handful of oil stocks playing for this counter trend move. Very difficult to do in oil. I'm not historically very good at it, but I did it for some reason. And it's like our volleyball team I just joined. I'm not very good at it, but I just joined it for some reason, so we're doing that. If you look at bonds, continuing to rally, so interest rates coming back down. We're going to talk about that here in just a second. What do you do? Is there a strategy there? How can you come up with something that's a little out of the box? Gold was actually down to start the day, but finished up positive. So you had the dollar moving lower as well. And it has been trending a little bit lower. So that's that one. And inside the market now, I gotta talk about it, right? This is what we're talking about after hours. Netflix. So Netflix is... it closed there, $869, and at the moment, after earnings come out here, it's up about 13%, $982, all the way up here. So that's going to be a new 52-week high tomorrow, if everything stays the same. Now, I wanted to point this out because if you didn't know, it's a little late now, but we're going to show it. If you look at Netflix, every investor that knows this stock likes the fourth quarter earnings, which is what we have that came out today. On the screen here, you see quarter one. There are 22 reports of a total of 90 since they've been a public company. They beat on earnings 82% of the time, 73% on revenue. And we start looking at the performance. So the opening gap in the first quarter, meaning what we're seeing now, this potential gap, tends to be to the downside. We tend to see a little more downside during the trading day, and the full day's performance tends to be, or averages 3.34%. It is only positive 32% of the time when they report their first quarter earnings. So that'll be the next one, right, that they report. You can see Q2, Q3, and we come down to Q4, there's a big difference. The fourth quarter is where all the investors and short-term traders love to play because of these stats. There's, of course, 22 reports there. Now there's 23. 82% of the time they beat on earnings, which they did. 73% of the time they beat on sales, which they did. And they also, congratulations, over 300 million subscribers. That's pretty cool. And anytime they raise guidance, it's going to happen historically in the fourth quarter. Now look at the average opening gap. This would be tomorrow. So all of this data looks at the next day because Netflix always reports in the evening. So average opening gap is about 10%. Where are we at now? Did you actually know when it did take off? It went to 9.83% is where it started. And now, of course, up 12% plus. Now, the other thing to note about this is if you look at that, let's say you come over here and you're like me and you go, 982, oh my God, it's going to be so extended. I should play for a big pullback tomorrow or whatever. You might not want to do that if you're going to follow the historical stats. From the open to the close, it barely pulls back, right? In other words, you don't see a 10% opening gap, but then during the day it falls 5%, right? Half of that. It tends to stay pretty strong. 73% of the time it's going to finish the day positive. So maybe, and obviously things change, but maybe tomorrow's not the day to fight the trend on Netflix. All right, let's go to some stocks in the news here. That was one of the stocks actually in the news. Apple. Holiday sales in China down 18%, so Apple down 3% on the day. This is going to be one of our office trades here today. We'll talk about that in just a moment, but that is the reason that Apple moved a little bit lower. Moderna, Health and Human Services, gives Moderna $600 million to fast-track the bird flu vaccine. Is bird flu a thing still? Guess so. Anybody? Kevin, you know a lot about bird flu? Not a thing. Okay, so $600 million. Congratulations, Moderna. Schwab. Oh, there you go. So up 6% on the day. They beat on earnings thanks to stronger revenues overall. And you guys trading away out there, trading volumes. 3M beats on earnings, beats on revenue. Guidance was basically the same there. And that broke it out officially from this range, right? So a little bit of action there. It is extended in the short term, but not as much as some of the other stuff. And over to home builders, which we're going to spend a second talking about. Dr. Horton down 2.6%. Closings, meaning they built the house, somebody put the deposit down, and then when the house was done, they closed on the house, right? So closings were up 7%, or they were up 7% more than expected that they had previously told us. Total orders. Here's the issue with Dr. Horton. I don't know that's an issue so much, but we like to look at their total orders. So in blue over there, you're seeing the total orders in hundreds of thousands. Notice that's been trending lower. Well, it's not such a big deal because margins, the dark blue line, is staying pretty much in line. So not a really horrible earnings report from them, but we don't like to see orders going down and margins getting just ever so tighter, although they have stabilized just a little bit there. Now, Dr. Horton says, man, there's an issue out there. There's not a lot of affordable homes. And so we're going to focus on more affordable floor plans in the communities that we're working on instead of trying to be heroes and, building really fancy houses, which they don't do that sort of thing. But those are some of the stocks in the news. All right. Speaking of home builders. Home builders, they've been beaten up with higher rates. Of course, that's a thing. So what we did is we put the 10-year yield, the actual rate, not the price, in the light blue. In the dark blue, we show the entire home builders sector as referenced by the S&P 1500 so that we include all of them, the big guys, little guys, and all of it. So in the blue, you can see that since rates bottomed out, home builders peaked. Kind of makes sense, right? As rates move higher, you would predict less and less demand. So now that we have this, and pretty much everybody's saying that's the peak in interest rates. If they go a little higher, fine, I don't know. But there's a lot of discussion out there about should you buy home builders or not. So how do you do it? This is not a recommendation, by the way, I do have to say that, but I'm just saying, how do you generate ideas if you're an investor that says, I'd nibble, I'll take a bite there and believe that rates aren't going to do a whole lot? Well, here you go. You can do a few things. You can play the whole sector. This would be real estate as a whole, and that's your broadest base investment because it's going to include your your data and storage units, going to include apartment complexes. It's not necessarily home builders. So you could go a little bit further and find an ETF that is traditionally just home builders. That's a broad way to do it. I would say a lazy man way to do it if you just don't have the time to pick the individual stocks. If you're going to pick individual stocks, well, you make a small list and you go, well, how about KB Homes? I don't know. How about Dr. Horton? We just talked about it. How about Pulte Homes? And you look around and see what kind of strikes your interest there. I say, well, what if there's somebody that says, I'm more experienced than that. I like to develop a strategy, something that I can do to maybe get a little closer. So what we did is we looked at the most beaten down stocks since the rates peaked, since rates have started going up, right? So which stocks were the most beaten down? But since rates started bouncing last week, rates started falling last week, we said, let's look at the home builders that had the biggest bounce, but were also the weakest through the whole thing. In other words, so while the home builders were pulling back, these were the worst performers, took that and put it in a basket and said, okay, now of those, go back a week when everything bounced, and let's see which ones bounced the most. I'm not saying these are stock picks or anything like that, but it's just a strategy that you could use for anything else in the future when you're playing this game. Well, we got 5 names to look at. There was actually 5. If we put them in an even weighted basket, meaning each one of them gets an equal say, and we say, well, let's pretend it's an index. It's not pretty. You can see that those are beaten down by about 40% since rates peaked. So which stocks are they? Let us take a look here. I'll give you a little overview of each. You make your own decisions. I am not making this as a recommendation. This is just a strategy thing to look at. Rocket Mortgage lender obviously would see higher demand with lower rates, and they were beaten down the most, but bounced the most since last week. You've got Opendoor. These guys basically use an algorithm to buy homes, and then they fix them up and they sell them and they hope to make a profit. It's pulled back a little bit. This is the smallest company out of the group there, but Opendoor is the one that's been beaten, another one that's been beaten down the most and has bounced the most since before today. You've got UWM. So these guys do kind of like, like if you're a mortgage broker, this is the service they probably use inside of that for brokers, some of the smaller banks and lenders and things. Does well, obviously, when there's a lot of mortgage demand. When would there be a lot of mortgage demand? When interest rates are predicted or are coming a little bit lower. You got Century Communities. This is a small home builder, a lot more volatile here. This is also one of them in there. And I think I said there was 5, but I've got one more. Was there 6 that we did? I did this over the week or yesterday. EXP World. This is like software for real estate agents. If you're in that world and familiar with that. So that's a handful of stocks. Now, I'm not saying buy them. You know what I mean? I'm saying, hey, we noticed something over here. Home builders are beaten down, and we're trying to come up with different ways that maybe you want to participate. We looked at the basket. The basket's been beaten down. We said, well, what if that basket sees more demand? There are also more volatile stocks if that's something that you're interested in. It is not, I repeat, to the SEC that may be listening, it is not a recommendation. All right, let's go over here. Office trades here today. Kind of a light day. With Apple. No, we're not going to be able to do it. I'll do it this way. With Apple being down today. Sold some puts on Apple there. Small position to get things started. And in fact, it was up already 22%. And had I saw that in time, my rules would have said that one's got to go, but I did not do that. Nucor, something we've been playing with for a while. Are we dead? Oh, it's just delayed. There it is. See, you just got to wake it up. Nucor. So this was one that had previously sold the 120 puts. It was a small position too. We do a lot of small positions. Closed it out for over a 50% profit thanks to really just a little bit of a rally there in the, well, it's been a couple weeks, so that's that one. And then the other one was, so from last week, I took my own lesson and said, well, hey, we were talking about these 0 DTE options that were expiring and just how popular they were. If you're interested, I believe it was on Thursday that we did this discussion, but if you're interested, what we did is we took a look and we said, out of the S&P, where is the most volume traded? And so in the gray, hopefully you can see the gray there, those were the daily or 0 days till expiration options. They had the highest amount of volume. So I said, well, we came up here, we shared the study with you. I should probably do it. So what I did is I had sold the $600 puts on the S&P, right? No, I think it was $599. I don't think it was $600. Anyways, they got offered to me, right? So it did pull back. It was 400 shares, took that. This morning I sold the $600 calls, and those are going to get called away tonight. So actually pretty cool. Be like $500, a small little trade there. And that was just to play on the 0 DTE based on the study that we did. So we don't say, We just talk about it. We don't actually do it. No, it intrigued me, so I actually did it. Okay, now let's talk about something that you're going to learn here first. Have you ever heard of AAII? What? What was that? I saw it out of the corner of my eye. Hit me? Hit me one time? Oh, shoot, you learned it here first. Stepping it up around here. Okay. Crazy. So AAII, they do a survey, basically. It's a big company, but they do a survey. And one of the things they do is they say, are you bullish or are you bearish? Right? And it's a survey that a lot of people participate in. It's not like a 2-person survey and it gets skewed. Well, I wasn't going to spend like all day on this, but what we did is we said, let's take those that are bullish versus those that are bearish and plot the spread. So in other words, if that blue line is going down and is negative, there are more people bearish than there are bullish. If the blue line is going up and is positive, of course, then it's the opposite thing. Well, what do we see? In the red, in the background, we actually have the stock market, right? So we're looking at the S&P. The market's gone up, but more and more people are getting bearish, right? And in fact, the spread there hit a 52-week low 2 weeks in a row. It's actually very rare for people to be so bearish right now, at least how they respond on the survey. And I said, well, what happened to the market the last time that happened? Because that's a really rare event. So here's the data. Now, don't let it scare you. I'm going to walk through it. The oldest one, back in 1998, the bull-bear spread was negative by 8 points. The second week, it was negative by another 8 points. The S&P was about 8% from its high. Then we say, okay, going forward, how does the market do? The week, the month, 3 months, 6 months, and a year afterwards. Now, in this case, this survey is a short-term survey, so I'm not thinking you get all excited about 1 year out. That's kind of far. So anyways, you could see that there's only a handful of other times that this happened. We share the spread in each one of those weeks so that you know what's going on and how far the S&P was from a high. In other words, just was the market near a high or was it so weak that people were just bearish, right? There's only really one time that was the case. In 2002, we were already down 22% or 22% from the high. And so you see, how that happens. Anyways, so if you don't want to look at all the details, let's go over here. So a week later, the average return basically flat, all right? Median return, slight positive. It was positive 60% of the time. You can see why. There are 5 examples there. 3 of them were positive. If we go over, and then if you look at the market any other time, just in general, how is the S&P in a 1 week period? Well, the average return is 0.18%, median 0.33%, and the S&P is positive basically about the same amount of times. All right. As you look forward, boy, these investors normally, might be kind of right. That's an average loss here a month later, 3%, 3 months later, and you find that you're only positive 40% of the time. Whereas in any 1 month period, the S&P's average return is 0.71%, median 1.14. In other words, I'm not saying we're going to fall 3%. I'm saying we can see that when that sentiment number is bearish 2 weeks in a row and negative, making new 52-week lows, that the market tends to underperform itself. Now, that could be by 1 fraction of a percent, right? Or a 100th of a percent. It just means that it underperforms itself during that time period. Not saying it happens again, just saying we spotted something and said that seems a little odd. What does the market do? Does it have any impact? And kind of interesting to see. Not to mention, we could use a little bit of a pullback here. So, hello, let's do that. Anyways, if you have any questions, feel free to let me know. Otherwise, we will move on and move out. Let's turn that down. I'll go over here. Forgot to do that. And let's see. Hope you guys are staying warm, by the way. It is, I know I have no reason to, complain being in Florida, but what is it like? It's 57 outside and cloudy and a little windy. Feels pretty cold. So that's it. Thanks, Grateful. Love the comment there. Hope everyone's having a good afternoon. Me too. Am I the Elon of investing? Chief of Doe. I'm the chief of Doe. Yeah. I do like their Doge idea there. Yeah. There are a lot of ETFs based on either 0 days till expiration or some really short time period. So some of the ETFs will go, if you look at what they're holding, they'll say, okay, it's Friday, we're going to sell Monday and Tuesday, and then on Monday, Tuesday and Wednesday, and so on and so on. So some of them think it's better to layer it and I don't know that that's any better, but it is what it is. Did we have other transitions? Let me see. Let me see one. What you got? Shoot. And it's just long enough, too. What do you guys think? It's just long enough. What's that thing? Oh, yeah. Oh, hey, by the way, I should say that. We're moving this show to the new channel and maybe some other interesting things to that channel, too, to get it off of this channel. So feel free to go over there and get ready for it, because
we'll also be streaming on both leading up to that date.
Can they hear you?
Yes.
Oh, I can hear them, too. You need a camera. We need a camera here to show our new thing. Oh. Oh, yeah, we remodeled the little cage that we keep Kevin in. Oh, and Cody.
And Matt.
There he is. I love it. Opinions on Oracle. We're getting billions from Trump. Yeah, I saw that a little bit. We're in the beginning stages here. I mean, oh, shoot. We may need new batteries there. Obviously, today's going to be exciting on that one. Just remember that historically, this is a tough stock to... Now, it could get more volatile now, but it's a tough stock. You got to be interested in being around for a while. I'd almost kind of equate it to gold a little bit, the way it moves. Yeah. Tom says, slow down the trend. I don't know. I thought it was pretty good. You don't want to take too much away from this, Tom. Mike says, it would be nice to see stats for the day after inauguration day for each president and what the monthly year end up would be. I actually do have that. I didn't think you guys would think that was too interesting. And then we also have, obviously, performance by president and how that all ranked there. Yeah. Got a wedding anniversary coming up. Is that true? Juan says, moving to a different channel. Why? We're moving because the algorithm on this channel thinks that we're retirement and planning, which we are. But then when we throw this stuff in there, it doesn't know where to send the videos. So when we weren't doing the show for a while, we noticed all the other videos do better. So we're just going to separate them so that we can do that. And then Kevin says, throw up the new thing again there. Let's see in the new channel. Oh, we're still working on the buttons. Oh, we got two. Ooh. Look at that, man. Just full of graphics. Thoughts on midstream companies for 2025? Patience. Just patience. That's all I would say at this point. And keep in mind, I'm not the best in that area. That's like my second least favorite. I'm not going to say sector, I guess, but energy in that sector. I would just say patience, right? Which is about all I can say there. Okay. Okay, so we wrapped it up there. Hope you learned something new here today, something different, and then got some insight into making strategies, thinking about I want to be interested in this sector or this industry. What do I do? What are my choices? So hopefully that helped. You guys enjoy the rest of your day and enjoy the graphics there, and we'll see you back tomorrow.